Foreclosures are up, or are they? Once again, the media is out there scaring your clients, telling them that foreclosures are up by 150% or 167% or even 187%, depending on who you're listening to. That actually may be true in some cases, and it sounds really bad, doesn't it? That's the way that the media wants it to sound. It's all about how they spin it. You and I both know the truth about why foreclosures are up. One, foreclosures weren't allowed during the pandemic. That is just the bottom line. And even into 2021, there were states across the country where the government stepped in and prevented foreclosures from happening in those particular states. So overall, over the last couple of years, foreclosures were really down simply because there was a memorandum that prevented foreclosures from happening. So if we have a foreclosure today and we didn't have any yesterday, then of course, yes, now they're up. The media wants to make it sound scary with that little sound bite, and that's where people stop. They don't go into the article and they're not getting the details. That's why I want to bring this to you, because it's up to us to get this information out and counter what that negative media is telling our clients. Number two, there was a huge housing shortage over the last couple of years, and people could sell. They didn't need to foreclose. People had a ton amount of equity and still do today, especially if they purchased prior to 2020. People are sitting on more equity today than they have historically. It's time to look at the full story, the big picture. You've probably heard that saying, the numbers don't lie. So let's take a look at the numbers. We actually had record low foreclosure rates because of those two factors over the last 2 years. So when we take a look at this chart, as we look back, 150% increase doesn't mean a whole lot. We still have significantly lower foreclosures than years during the housing crash. Also, homeowners have a lot of equity in their homes currently. This opens up new opportunities for people to reduce debt or lower payments, again, reducing the need for foreclosing. And if they can't pay their payment, but just selling the house and being able to walk away with those funds in their pocket. Real estate agents, we have to get out there and share the truth. Don't let national media be the voice that people you know are hearing and listening to. I literally had a call yesterday, and the client's a first-time home buyer, and they're going to wait until the housing market crashes. Lots of education opportunities out there for us. Nobody knows really what's going to happen. But statistically, based on the numbers, when we dig deep, we still know that there's a housing shortage nationwide. The big reason for this slowdown are interest rates. And interest rates come and go over time. And when those interest rates come down, with the housing shortage still a real thing in this country, we're going to see buyer activity pick up, and we potentially can see a similar market that we saw a couple years ago, meaning now we shift to a seller's market and it's more difficult for buyers to get under contract. So today is the day to be able to leverage the current climate. If you have buyers out there that want to buy, help walk them through and debunk this national media ploy right now to tell people foreclosures are up. And yes, they are, but if we had one foreclosure and now we have two, it's a 100% increase. It's all in the way they're sharing the information. Interest rates have settled down a little bit, but we still need to let people know that there are options for affordable financing strategies, such as using a seller credit to help buy down the interest rate if that can be negotiated. That is a great strategy to give people that runway into a lower interest rate, something that's more affordable with interest rates higher. That 2-1 buy down, that 3-1 buy down, those are big wins in today's market. And remember, when the seller is contributing to, let's say, a 2-1 buy down, if the buyer refinances that loan, let's say in the first year, if interest rates do drop, then that money that they received from the seller to use towards that buy down gets credited towards their payoff. So it's not just lost money, it's still money that is helping the buyer. Don't forget, the KellyZitlowGroup can lend in 38 states and counting. If you have a client that you would like us to do a quick 15-minute strategy session with, send them our schedule link in the description below. We'd love to talk with them. Also, there are a few loan programs that weren't as popular over the last few years that are making a comeback. So be sure to watch my next video and subscribe to this channel so you know all the loan programs that are available to your buyers in the current market. Then let's get out there and let's get loud.